Hello, everyone, and welcome to Inspiring Best Living, where we talk about wealth creation, wellness, and well-nourished soul. My name is Remi Wesley Ogude, your regular host, and I'm delighted to be back on another episode of our wealth creation series. Topic today is growing your income through real estate. Real estate can help you to grow your income both in the short term and in the long term. And when we're talking about income, I'm talking about passive income. Income you earn when you put your money to work. A lot of people want to replace their earned income and they wonder how. Real estate is one of the ways through which you can do this. If you're already earning passive income, but you think you can earn more, I believe you'll be able to pick one or two things from this episode. The first thing we want to consider quickly is what are the three ways through which real estate can impact our income. The first one is real estate can give us cash flow. Cash flow is what we receive from our rental income after we have taken out mortgage and all the expenses around the investment property. The second way through which real estate impacts our income is through capital gain. Capital gain is appreciation on your property after some time that you have bought the property. When you want to sell it, it is the gain, the profit you make after you have taken away your cost, the cost and the expenses of purchasing the house. The gain over it is what we call capital appreciation. The third way through which real estate can impact your income is through refinancing. Refinancing is when you pull equity out of your current house or current investment property to either buy another property or to use it for other investment purposes. This is called refinancing. There are limitations that we can have when we want to use real estate as one of the ways to grow our income. The first one is that real estate may become illiquid if certain things do happen. Number one, if interest rate or the cost of maintaining the house becomes high. Some people, if they don't lock in their interest and there's changes in interest rate, it can adversely affect their cash flow. Also, there could be major structural changes in the house that could begin to affect cash flow. Changes like maybe there are certain maintenance costs that you did not anticipate that just begins to show up, maybe because of the damages to the house. If one is unfortunate to get the wrong tenant who has damaged the house or who has refused to pay rent, that could also be part of some of the costs that one can incur on the house, which could reduce the cash flow or which could actually make your cash flow to become negative. The second one is variable interest, which I had also mentioned. Variable interest can make one's profits to become even loss if the interest increases so significantly. It can wipe off profit in real estate investing, which can impact one's passive income negatively. Vacancy can also impact one's real estate business because you need rental income to be able to pay your mortgage and also to be able to maintain your other expenses. Because even if the house is vacant, you still have to pay your mortgage, your property tax, some fixed expenses that are associated with the property. So it's so important not to allow the house to be vacant, especially for too long. The third one is tenant problem. There could be tenant problems if one is unfortunate to have the right tenant. If one gets the wrong tenant who damages the house or who does not pay the rent, it could impact the house. The logical question we may want to ask is that what are the things that we can do to overcome the limitations of using real estate to grow our income? One, we have to be very conservative and make good, reasonable assumptions when we are doing our underwriting. Because if you don't make reasonable assumptions for things like vacancy and also your property tax, your insurance, all the costs that are associated with real estate, this may impact on the profit, and the property that is supposed to cash flow may not cash flow again. The second one is to build a portfolio of properties that can cushion one, to compensate one from other losses. If you have 2 or 3 or more properties, it can help you cushion loss from one property that you have already incurred. The third one is to have a mixed property class. Yes, some people will just go for properties like pre-construction, and they can have 2 or 3 pre-constructions without even mixing it with any other property. So it's better to mix it with pre-owned. You can also do a multi-family rather than just concentrating on one asset class. This is very good, so that if one makes loss in one will be cushioned by making profit from the other ones. The fourth one is locking your interest rates. Interest rates, especially if one goes for variable interest rates, can expose one tomorrow if the interest rate rises. It has affected people so that the rise in interest rates could no longer allow them to profit from their investment property. The other one can look at is improving on tenant screening. Tenant screening process is a skill one must develop if you want to have a good tenant who will be able to pay your rent, who also will not damage your property. So it's so very important to be able to understand this skill, to be able to know this skill and to use it appropriately. Not only that, you also need to understand the landlord-tenant board rules and regulation around the eviction. In the unlikely event that somebody has a tenant that needs to be evicted, you need to know more than your tenant. The day your tenant knows more than you, it's not good at all for investment property. And in conclusion, I want to quickly say, as someone said, that money does not grow on tree, money grows on skills. So for us to really be able to earn more from our real estate investing, we need to be able to grow our knowledge and our skill. The more we grow our skill, the more we actually earn. And like someone put it, John Ron said, the only way to earn more is to become more. And this is so very true. To do all the things I mentioned earlier will require you to grow your skill. As you grow your skill, you become more and you can earn more. This is where I'm going to end it today. I want to quickly remind you before I leave that this platform is to inspire you in 3 areas: wealth creation, wellness, and well-nourished soul. Remember, you don't have to choose between being healthy and wealthy. You can have both as icing on the cake of a well-nourished soul. Thank you for listening. I want you to please share this video and the link with your friends, family, and those who can benefit from it. And please don't forget to subscribe by pressing the notification button so you can be notified right away once a new episode is produced. This is where I'm going to stop today. Until I come your way next time, I'm your regular host, Remi Wesley Ogude. Take care and bye.